Good evening, everyone. David Paul speaking. It's 20 past 8 in the evening, Tuesday, the 10th of November, and looking at the UK market after the close. A lot of green in the UK market. If we'll have a look at the FTSE 100 in a second, it's moved with momentum that we haven't seen in quite a long time. The short term trend of the UK market is up. The underlying trend is up, and the longest measure of the trend on VectorVest is still not turned up. It turned up in the US today. So we have 736 shares on a buy, 263 on a sell. That means the buy-sell ratio is a very healthy 2.8, and it's grown day over day and week over week. And VectorVest advocates buying safe undervalued stocks that are rising in price at this time. So if I have a look at the market timing chart of the UK, there's where we are. And the VectorVest Composite, which is an equally weighted index of all of the shares we follow in the UK, much stronger than the FTSE 100, and nearly got to the February high on of 440 on the composite. If I put on the longest measure of the trend on VectorVest, there it is. And as you can see, the longest term measure of the trend, that was an up signal. That was a really good sell signal on the 25th and a buy signal on the 27th of April. And that buy signal in fact stopped here. However, the sell signal came to nothing. In our position trading system known as worry-free investing, when we get a sell signal, we hold the shares that we've got. We don't get out of them. We just watch our stop losses very carefully, and we certainly would not replace if we were stopped out of any share. But although it came close on Cranswick, I wasn't stopped out of anything on this particular run. So pretty much the shares that I've got are the shares that I started with in April, and I've added a few along the way. So let's have a look at those. So if I go to where am I now? Viewers, and I go to watch list viewer, watch lists, and that's the watch list of the shares that I'm holding. Lion Trust has had a particularly good day. Now this is the default sort is VST, but when you own the share, the most useful sort's in fact RT, because that brings the shares that are trending strongest to the top of the pile, and those are those that are causing trouble that you need to watch to the bottom of the pile. So immediately I can see that the shares that are causing me most grief at the moment are Team 17, which I added late in the day, and Plus 500, which I also added late in the day. So JD Sports at the top, and if we actually have a chart these now, we can have a look. I'm not unhappy with any of them. That was JD Sports. It came back into this range, and you know that's just what markets do, folks. And they put the fear of God into. They did it there. We had one of our VectorVest subscribers, very experienced investor, got stopped out because the stops are underneath these lows. So this looks quite good. Clearly this was positively affected by the COVID announcement yesterday, so that's good, and our valuation 7.59. Now a little worry on this, that earnings per share is up and down, but certainly giving it the benefit of the doubt at the moment, it's going well. That's Tristel. Tristel looking quite strong here, as you know. It makes the 5-year chart of this is really good, and that's earnings per share going up over the 5 years, and it's pushing on new highs now, and I think that's a share that needs to be given a fair amount of room. So that one I like. And this is Lion Trust Asset Management again, with the index, done nothing since June, hopefully going to push through with the index. VectorVest valuation and this is right up at £18. As you can see, the earnings per share, well, it's going up. If we look at it over 5 years, it looks much better, and you can see the steady growth in earnings from 2016, where earnings has grown by 4x. I'm hoping this is going to push through this old high. This is the February high, relatively soon. So I'm holding that one. I'm happy with that. Cranswick, well, Cranswick Again, I won't put up the 5-year view, but you can see over the last year, earnings per share is going the right way. That was the results. It went to £44 there, and it's pulled back in 3 waves, which is always good. And it stopped at the 78% retracement. I've ignored this tail, and it has been positively affected by the COVID news as well. It was moving well before that, so this has gone from 32 to 36, definitely holding that. Although, as you can see, it clipped its stop loss, and I had my son in Johannesburg watching stop losses on it for 2 days there, but we managed to get through it. Sylvania Platinum, probably the only share that wouldn't be classed as a worry-free share, but moving up strongly, and again positively affected by people going back to work. So I really like this little share. I know the spread is wide, but there's earnings per share going from 5 pence to 15 pence and pushing strongly. The VectorVest valuation is right up here, so I'm okay with that one. Halma is just a great stock. As you can see, it's left the February highs behind, showing incredibly strong relative strength to the market. It's come off that level, and it's going to come back, I think, and I thought it would have stopped there, but the noise in the market has, so we need to watch it, but it's doing the right things, I think. Games Workshop, maybe a bit worrying for some people, and it came off in style, I presume. If people go back to work, they don't play lots of games. I think that's the rationale. But we've got this level at £100, and I think that's a very important level indeed. As you can see, earnings per share marked up in the last couple of days. I think this is a really good story, but there's no doubt, folks, that it is well. Technically, it is in fact right at the top of this range, and fundamentally it's gone a long way since it was at £40. So the growth story is not nearly as good. In other words, it's just too expensive at the minute. So we have to watch that. It could quite easily pull back to £75. That old top. If there's any weakness in the market, quite easily get back to that. So we just need to watch it carefully. Don't want to give that back, but I think it's worth giving it as long as it stays above 100. GB Group has given back a little bit, but folks, it broke this £8 level, and there's such a lot of resistance there that invariably the orders will be sitting at £8. So I think that what it's done, pulling back to that level, is the most natural thing in the world. So I'm not particularly worried about that. I think this is something we have to worry about, at least I have to worry about. I wouldn't be at all surprised to see this come back to this level, and that would mean that I'd be underwater in this because I bought it here. It's still on a hold on VectorVest, but it broke up, and that didn't particularly work that well. Earnings per share is great here, but these people have sold like computers in batches of 1,000 to banks in the city for home workers. So if the perception is that that's going to go away, then this could take a knock. Nevertheless, it is a good story. Look at this again, up around here, very, very overbought indeed. If I put my fib on here, we can see that the 1.618 extension is right there if we ignore that spike. So maybe that's what stopped that market in its tracks. So we could have a little bit of a pullback here. So need to watch that. Avon Rubber is pulled back into this channel. Just have to watch it, obviously. Earnings per share is going up the right way, but I think, folks, that resistance, this support, we have to give it the benefit of the doubt here. It's been a great share for us. Hilton Foods, same thing. If we look at this over 5 years, you can see this incredible run up here. It's well above the February highs, and we definitely, I'm definitely holding on to that as well. That's Team 17. And Team 17 was a late edition of mine, somewhere about here. I can't remember where, but certainly that level's important. Below that level, then we've got trouble. And then, of course, my bogey share, which is plus 500, and plus 500 has always caused me grief over the years. We watched it today, and my son in Johannesburg was tasked to watch it today, and it clipped a sell. It clipped a sell recommendation yesterday, and my instruction to him was that if it fell below those lows, that it needs to be get rid of. But nevertheless, this is a very important level. This is resistance, this is support, and we're still holding on to it. Sorry, I've got a bit of a cold on me, a bit of a sniffle on me. I don't know how I got it, but I get this sinus from time to time which clogs me up. So folks, that's what I've done in the UK. We actually have a look now at the VectorVest at the FTSE 100. You can see that it it's got a head of steam up that we haven't seen for quite a long time here. Get rid of the earnings per share because we haven't got that. If I do a fib between those lows and that high, you can see, and that, see the tails here, that was accumulated at that level, that 62% level, well in advance of any news from North America or the virus or whatever. So the fib levels, whether you believe in them or not, whether you believe they're sent down by the Almighty or whether they're in fact caused by everybody watching the same level, doesn't really matter. Markets just stop at them all the time. As you know, the 786 comes up frequently as well. So all looks good here, and I'm holding my positions, and I haven't bought any gold stocks. I was going, my job on Monday afternoon after the VectorVest Q&A was to actually buy into some gold stocks, but the momentum of the sell-off on Monday afternoon on the gold market, it fell what, $100 in a couple of hours. So that momentum in fact scared me a little bit, so I haven't done anything at all in the gold market. Nevertheless, gold's sitting at very, very good levels. I think it was important that it didn't break the 1848 level, which was the old low of a month or two ago, and it bounced off that level. If you have a look at the chart of bullion, the rally today doesn't look that convincing. At least it didn't look that convincing the last time I looked. So just be very careful there. Just be careful. So steady as she goes, folks. Let's just go to the American market before the it'll close in about half an hour. And as you can see, it's pretty much where it ended up last night. It's off a third of a point, 3549, and as you can see, all the measures of the trend on VectorVest are now up. Okay, so the MTI at 1.56 in America is getting overbought. Why is that important for the UK? Well, invariably our market will follow the American market about a nanosecond later. Okay, nanoseconds a very small interval of time. It's the sort of time in London between the traffic light turning green and the bloke behind you blaring his horn. It's a very short space of time. Buy-sell ratio at 2.46 has still got legs in it, so this move could easily still have legs in it before becoming overbought, certainly in the short term. So good day in America, good day in the UK. Let's see what tomorrow brings. I'm holding positions in the UK. Remember, my positions in the UK are unleveraged, and it makes it an awful lot easier to handle through the noise. The positions that I had and got out of yesterday, not easily I may add, but I got out of them because the brokerage services were well, poor. They were leveraged, and that makes it virtually impossible to handle the noise, the sort of noise that we had yesterday. So those of you that are new, get yourself to a point where you're buying a share at £10, you're selling it at £15 and making a bit of a profit before you think of leveraging yourself up. Leverage is not linear. Okay, it adds to the emotion incredibly. Very few people believe me when I say that, but 6 months into your trading journey, if we have a chat again, I assure you that you'll probably agree with me. Have a great evening, folks. Speak tomorrow. Bye.